Hello, my name is Ed Coyne, Senior Managing Partner at Sprott Asset Management. I asked our CEO, Whitney George, and one of our Senior Portfolio Managers, Justin Tolman, an economic geologist, to join us today to talk about Sprott 2025 and the year ahead. Whitney, let's start with you. Tell us a bit about Sprott and the year we just experienced.
Okay, well, Sprott is an alternatives asset manager with a singular focus on metals and the miners who mine them. Um, we've been building the firm to its current configuration since 2017 to become the leader in all things metals and mining on the planet. So we offer a broad range of products, both trusts that invest in physical materials like gold, silver, and copper, as well as ETFs to give people exposure to the miners. This year has been just an amazing year. I don't recall ever seeing more than one material going up at any single time, and they all seem to be going up. Gold's up over 60%, silver's up 114% or 15% before today. Copper is even catching up at up 33%. We have many ETFs that are up between 40 and 150% year to date. So it's been a long time in the making, but it's all coming together very nicely. And I think a lot of it has to do with what I'd call resource nationalization. Obviously, tariffs, essentially you need more material for the same level of demand if you're inefficient in terms of where it's stored or how it moves around. That's already on top of some very tight mine supplies coming into this because of 2 decades of underinvestment. And now we're seeing some supply disruptions. And then finally, later in the year, the debasement trade came along, and essentially people all over the globe are worried about senior sovereign debt of developed countries and the potential inflation that will come from declining currencies relative to hard assets.
Great. And as we close out 2025, feels like there's a lot to look forward to in 2026. What are some of the things you're focused on, paying attention to, maybe cautious about? What does 2026 look like for Sprott and for us as a firm?
Well, clearly, you got to be mindful of corrections. That's a normal part of the markets, and we've had a tremendous run. But I do think they'll represent opportunities for investors if they come. None of the fundamentals have changed. And this is a very new trade. People have not paid attention to the mining industry for decades. They've been focused on many, many other things. So fundamental results will be very strong because of strong metal prices and contained costs. And it's just the beginning in terms of the audience or investors discovering this space. So the long way to go. This is kind of the wake-up call this year for sure, but I expect that we'll have many more clients next year than we have right now.
Wonderful, wonderful. I do like to hear that. Justin, as one of our senior portfolio managers, we look at both the physical market, as Whitney said, but also the miners. Talk to us a bit about how investors should think about both. How should they be viewing the physical market, and how should they be thinking about investing in equities or mining stocks themselves?
Yeah, happily, Ed. I think about the physical market and, gold and precious metals specifically as your defense. They provide a great hedge against inflation. They're going to preserve your purchasing power over time. They'll help to mitigate currency risk. They'll help to mitigate market volatility. Increasingly, we're seeing, bigger institutions this year, both JP Morgan and Morgan Stanley came out suggesting that gold should replace bonds as part of a diversified risk portfolio to the order of 10 to 20%. I think about the equities as your offense. If the metal is your defense, the equities are there. They're going to give you torque and leverage to all the themes that Whitney was talking about. They're also going to give you income through dividends. They're going to give you exposure to growth as the companies bring on additional production, which means that the equities do add greater risk, but if it's managed well, they can provide greater returns.
Well, speaking of equities and the greater returns, at Sprott, we have a full suite of passive strategies. We also have some factor-based strategies, which are interesting. And then we have the active suite, which is really starting to grow as a firm. Talk about the importance of being an active manager in a space like mining equities.
Of course. On the managed equity side, for us, we have a bias towards quality assets, quality management, preferably both. We feel like over time that gives us the best potential to generate alpha in our investments. And when you look at the composition of our strategies, you'll see that reflected. Compared to some of the more passive strategies that are available out there, which are mostly constructed to provide beta to the underlying index. In the current strong markets, there's a couple of additional levers that active managers can pull to try to generate outperformance. The first is being early on new discoveries, being early on turnaround stories. And that's something we really try to lean into. We spend a lot of our time and energy engaging directly with issuers, understanding the operations, going out to visit sites, and investing in those things before they meet the criteria for passive strategies. The other thing that you can do is you can look at where you are and understand where you are in the cycle and position a portfolio accordingly. Which miners are poised to generate outsized returns, which have levers they can continue to pull to fill extra capacity and take advantage of, the margins operators are enjoying right now.
As we go into that, and as we go into 2026, clearly 25 was a banner year from a performance standpoint for investors thinking about the space again. What should we be thinking about then in 2026? As someone that says maybe they feel like they maybe missed this move, is this move just getting started? What are you thinking about in 2026? What would you say to an investor that's moving into the equity space today?
Let's start with the senior producers first. I would note that they've all had strong returns here, and the margins that they're generating now, I expect to lead to banner Q4 earnings results, which will continue on into 2026. I think the majors will, first of all, I think those earnings will be of sufficient largesse that they'll cause the rest of the market to sit up and pay attention to our oft-neglected mining and metals space. But then they'll take those strengthened balance sheets and they'll start looking towards some measured growth. That could be from their organic pipelines, but increasingly it's going to come from M&A as they look to expand production. And that leads us into the mid-tier and the junior companies, which I think you're going to see increasingly the best of them see improved valuations heading into 2026 as generalists and value investors get comfortable with the space, start to look down market and recognize the opportunities that are there. That will only accelerate the M&A theme, which has already begun and is going to be exacerbated by a real scarcity in our business of construction-ready opportunities.
So it's fair to say more to potentially come as we go into the new year.
I'm very excited looking into 2026.
Wonderful. And Whitney, for those that are watching this video today, if someone wants to learn more about Sprott, what can they do? Where can they go?
Well, they can start by going to our website. We're very, very conscious about being a go-to resource and bringing lots of expertise, white papers, commentary to the mining space. We're active in social media. And of course, you manage a team of great client service professionals, and they're welcome to call or arrange an in-person visit with you.
Wonderful. Thank you. And for those that want to visit us, please visit Sprott.com to learn more about who we are, what we do, and how we can invest for you and your clients. Thank you for watching.